Not a bad session to start the week, and as we said, a little bit of an acceleration into the close.
It was a good session on the market, up by 0.7%, but it is difficult to read anything into today's performance, and that's simply because of the low amount of volumes going through the market. In fact, we had an under $3 billion traded day, so it was extremely light volumes. Having said that, most sectors generally traded higher, and we did see overseas market rebound upwards on Friday. So generally, we did see a rebound in risk sentiment, and that means some of the defensive areas really underperformed. In terms of sectors, it was the consumer discretionary sector which managed to outperform today. We saw News Corp up by 2.9% and Flight Centre up by 2.1% on the market. And in fact, a lot of these consumer discretionary stocks have done well over the last 52 weeks. We have a look at News Corp, it's up more than 60% over the last year. And if we have a look at Flight Centre, it's up more than 70% over the past year. So it's been a good performance, really being helped along by hopes that cyclical conditions are really starting to turn and giving some of these discretionary stocks a bit of momentum. It's worth mentioning that we did see a number of companies also reaching 52-week highs. So some of the new internet, new media type of companies doing well, like Car Sales and Seek, both of these hitting a high. We also saw News Corp hitting a 52-week high. And then we also saw Transurban and JB Hi-Fi doing well today on the market with a 52-week high as well. Gold stocks also rebounding with the recovery that we saw in gold prices. Last week during the Asian session, we saw gold prices reaching a low of $13.20 US an ounce. And of course, in New York, we saw a close at $14.03. In Asia trading today, we saw once again a move higher to $14.19 US an ounce. So that was all good news. And good news for the gold miners who are due to report their production reports tomorrow. We'll be hearing from the likes of Newcrest Mining, St Barbara Mines, as well as Beetle. So a good session for gold, and hopefully we'll see some good production reports from those gold miners tomorrow.
At resources space, Oz Minerals coming out with a production downgrade. Never obviously something that companies want to do, but the sell-off in terms of their share price closing down over 10.5%. Look, an overreaction or justified?
I think it was a combination of factors here. One was that production downgrade, as you mentioned, James, and brokers really haven't been positive on Oz Minerals. There's a number of sell recommendations already out there on the market with Oz Minerals because of the amount of capex that it will be looking at in 2013, and consequently the fall that we're going to see in free cash flow there. But together with that production downgrade and the rising costs that we're seeing from Oz Minerals, we saw the copper market really being hit quite hard in Asia. While we saw a recovery in gold prices and the other LME metals that are traded in copper in Asian trade, we actually saw a fall. So on the LME on Friday, we actually saw copper falling below that 7,000 US a ton support level, and that's a key level. If I just bring up a 5-year chart of copper, this is what it looks like, and you can see that 7,000 point mark is a key level there. We dropped below that on Friday, and during the Asian session, those losses just simply continued on. So now we're seeing copper at 6,910 US a ton, so that's down 1.1% from the LME close. So we've broken an important support level, and that always adds to a bit of jitters, and on a day where we've actually seen a production downgrade come through from Oz Minerals isn't a good sign. So we have seen a production downgrade. Copper will now be 82 to 88,000 tonnes for Oz Minerals, and now they are predicting that C1 cash costs are going to come in at 165 to 180 US a pound, and that's a substantial increase from its previous forecast of 150 to 165 US a pound. So altogether, not a good day for Oz Minerals. The losses were very steep. In fact, the stock down almost 11% by the end of the session. Just
on the copper price, Julia, I've seen suggestions 6,500 in terms of a near-term level to be looking at for that copper price. What does that potentially mean for our broader market, so closely linked, or has in the past been, with commodity prices, of course, copper the bellwether?
I guess many see that gold was perhaps a canary in the mine, and now what we are seeing is it moving towards other metals complexes. But what we are probably seeing is that on a broader macro level is that we are seeing a readjustment in terms of expectations around global growth, and that expectation really just started in the gold market and now has transferred onto the copper market. So if we have a look at that key economy of China, it is going to be important tomorrow, where we do see the flash PMI numbers for April come out, the HSBC flash numbers. So we are expecting to see a read of 51.4 there. This is one of the first views that we get into the manufacturing sector in China. So we'll be watching that one closely to help us dictate where the materials and where the commodities are going to likely trade and in what direction. But altogether, in terms of the paper market, while we have seen a loss, the steep fall that we have seen in a lot of commodities has actually seen some physical buying come in terms of the gold as well as the copper market. But the copper market not looking too good technically at the moment. It is in a bear market. It's pushed past that 20% loss from the peaks that we've seen, and we have just broken an support level, so it's not looking too good in the short term.